Coke is the one reporting. And want to get straight over to Sarah Eisen, who has those numbers. Sarah.
Hi, good morning, Andrew. Coca-Cola with a pretty strong quarter, a beat and a raise. Let me just quickly run you through the numbers, and I'll tell you about my conversation I just had with the CEO. So a beat on earnings, 65 cents. The street was looking for more like 58 cents. A beat on sales as well. Revenues at $10.04 billion. The street was looking for 9.75. Organic revenue growth, which is always key for these consumer staple companies, coming in at 14%. Yes, they are lapping some pretty easy comps because this time last year, the business was shrinking. But also, James Quincey, the CEO, tells me there's a lot of progress here when you look at these numbers relative to 2019. I'd say that was my biggest takeaway from the conversation with him. As far as the outlook, they are raising it for 2021, reflecting the confidence that they have in this business and the comeback that they have seen on earnings growth to 15 to 17%, on organic revenue growth to 15%, and on cash. So Quincey telling me, look, here's what happened. We told Wall Street that we were going to get back to 2019 levels on volumes and on sales faster than the overall economy, and that's what they've done. How have they done that? Well, it's Coke, so they operate in 200 countries. He said they've taken lessons from some of the lockdowns that they saw in parts of the world, and they were able to mitigate some of the other lockdowns better. Focus on the at-home business, for instance, instead of the away-from-home business, which got actually crushed during COVID, and by the way, is not fully back. Whether you're looking in the U.S. or you're looking around the globe, that away-from-home business, which is about half of Coke's business, is still hurting. He said it's back in categories like quick-serve restaurants, especially those that are digitally inclined or that have drive-thrus. But if you look at travel and leisure and hospitality, Coke is big on cruises and in stadiums and in concerts. Definitely not back to where they are, which is why Quincey is so proud of these numbers, both on volumes and sales, being back to 2019 and growing from last quarter. Just in terms of what products are working, it was pretty broad. Coca-Cola, brand Coke did well. The company has really turned back on the marketing machine after they basically pulled it at one point last year during COVID, just stopped spending on advertising. That's way back up. Coke Zero Sugar continues to grow very well. They saw growth back in Sprite and Fanta, which was obviously hurt during the lockdowns. And as far as supply chain, guys, Quincey tells me he doesn't philosophically like the whole blaming of supply chains, like the weather, as an excuse. But obviously, the situation is tight. They're feeling it on all fronts, commodity costs, transportation costs, but they are able to navigate it. He said it wasn't cataclysmic, though you may notice, Andrew, go into your local grocery store, you don't see as many cans or bottles stocked as you normally would. And that's just part of what's happening to Coke and everybody else right now. They expect it to impact results next year. They said a few points headwind on next year, but they'll give further earnings guidance on 2022 next quarter.
You're absolutely right, Sarah. I can't find my ahas. As you know, my love affair with those ahas. I can't find them in the supermarket. But what I wanted to ask you about was just margin. It goes to the supply chain issue, but virtually every CEO has been talking about the increased cost of labor. Was that something that came up?
It's something that came up, but it's definitely not something that was underlined. And Coca-Cola, I would say along with its chief competitor, Pepsi's results stand out amid other consumer staples names, like the food companies in particular, the Campbell Soup, Conagra's, General Mills, and Kellogg's, which are seeing big margin pressure as a result of labor costs, higher commodity input costs, higher costs for their materials like cans and bottles. And Coke is feeling all of this, but it's not something that's getting in the way of the profitability story. And I think with Coca-Cola, as is the case with Pepsi, the scale is so key. They operate in so many different parts of the world, and they're able to adjust really quickly. But no, we didn't talk about anything like they can't get people at the factories or in the workshops. That's still happening. And by the way, Coca-Cola offices in Atlanta, still not fully open. James was there, but he's bringing back people in November and early next year. But it really still hasn't happened because it's a company that, he said in some places in Southeast Asia, the operations are fully closed. So they've been dealing with sort of rolling shutdowns and trying to be agile, but emphasize the fact that they are so big and so broad that they're able to do it better than others. And that includes dealing with some of the packaging issues as well.
Hey, Sarah.
If there's not enough cans, you switch some of them to bottles.
Shepard Smith here. Thanks for watching CNBC on YouTube.